Welcome back. This is India Market Open. We're taking stock of the futures and options space at the moment. Turned out to be a very, very interesting expiry and perhaps for call writers, not a great one, but certainly a good one for all those who were long in the markets yesterday, specifically in the last 1 hour of trade. Let's take a look at how things have panned out. As far as the futures are concerned, well, on expected lines, we saw a lot of shorts being covered, indicated by a decline in open interest. It was the last half an hour, 45 minutes, which actually did lead to a sharp rise in the Nifty from day's lows all the way to day's highs. And that has actually led to a lot of call writers running for cover yesterday. Of course, let's not forget that it was also the weekly options expiry. So I reckon that that element had to play. And the markets were looking for a trigger. They found that trigger, and that set off, in fact, a sharp up move. When it comes to the bank Nifty, again, the picture wasn't very different. We saw a little bit of a decline in open interest when it comes to the futures. Coming down to your Nifty options market, what can we expect as we move into the next week? Well, once again, the options market was all over the place across many strikes, considering there was so much choppiness in the Nifty yesterday. But when it comes to your overall open interest distribution picture, at the moment, we're continuing to see a substantial amount of calls and puts being written around the 22,400 strikes. Now, let's also take a look at the June 6th expiry and see how things have changed. Until yesterday, we were only talking about two strikes, two levels. One at the 22,000 mark, where we have the most amount of writing as far as calls and puts are concerned, followed by 22,500, where there is a significant amount of call and put writing. However, now we also have the 23,000 call coming back into action as far as your June 6th expiry is concerned. Of course, we all know June 6th expiry is important because that's the week in which we will have the outcome of the general elections, which means that you will have a lot of bets being placed for that specific week, and we will have increased activity there as well. Well, let's move on and talk about stocks, and we have green across. So longs for Balkrishna Industries, M&M, which announced earnings during market hours, Oberoi Realty, Hindustan Aeronautics, as well as something like an Ipca Laboratories. Hindustan Aeronautics up another 10%. It's a whopping up move at a new life high, and this follows, well, some positive broking notes that came through over the course of the last 2 to 3 days, and we're just continuing to see that build up of an up move there as well. Well, besides that, we're also keeping an eye on stocks which are unwinding, short covering for LIC Housing Finance, IEX, Manappuram Finance, PFC. All in all, it turned out to be a very good day of trade for those who were long in the markets positionally, and a lot of shorts being covered as well. But let's take a look at what our experts have to say and what they make of this market. Well, we have Aditya Arora of Adlatic Research who's joining us on the show. Aditya, good morning. Thanks for joining in. Your view on the benchmarks, the Nifty and the Bank Nifty, what are you doing with them?
Very good morning, Agam. I think the move yesterday was really dramatic from day's low to day's high, and a big spike is what we saw. But that denotes, huge change in volume, which also denotes huge change in trend. So now 22,050 on spot is a very strong support for the market. Until that is not taken out, one must maintain bullish bias or neutral bias in the market. Although FIs continue to maintain high level of short exposure in the market. So trend will turn negative below 22,000 on Nifty. And similarly, we saw similar kind of patterns in Bank Nifty as well, where Bank Nifty shot up from day low to almost day high. Almost 500 point of move over there as well. So 47,200 is the support level for Bank Nifty in spot level. Until that is not broken, one must maintain bullish bias over there. And once 47,000 is broken, one can take short positions over there. Important point to note is that FI is not reducing the short positions. So I expect almost 2,000 point of move in Nifty till election. So one must be prepared for very high volatility and very big moves.
Well, there's no doubt about the fact that one must brace for an event that happens every 5 years in India, of course. But moving on, Aditya, I believe you have two calls from the technology space. Interesting Can you take us through this one?
Absolutely. Technology has come into limelight after a very long time of underperformance. And one must note that the divergence between NASDAQ and Nifty IT is very huge. So now there could be a catch-up rally in IT stocks. Yesterday we saw a good movement over there. Good patterns have been formed, bullish patterns are there. So my long would be on Infosys. 1460 call could be bought at 19.95. 1480 call could be short at 12.05. Maximum loss potential is 3160 and maximum profit potential is 4840. So it's a bullish strategy. If stock goes up, one who makes this strategy makes money.
So, well, there you have it. Those are two calls coming in from Aditya. Of course, he's spoken about Infi, but let's go. Let's talk about Tech Mahindra as well. Aditya, can you take us through this one too?
Sure. So Tech Mahindra is also a very good candidate. It showed a rally a few days back, and after a consolidation, it's again starting a fresh leg of rally. So one can buy 1310 call option at 27.40 and can sell 1330 call option at 18.50. Maximum loss potential is 5340 and maximum profit potential is 6660. So it's a bullish strategy. If stock goes up, it would be a profitable strategy.
Okay, so bull call spreads for these IT companies which are on the radar of Aditya. Aditya, taking a moment to thank you for joining us and taking us through your views on the markets and giving us those two option structures on those two large IT companies. With that, it's over to you, Tamanna.